Let's bring in Brian Sponheimer. He is a portfolio manager at Gabelli Funds and an analyst focusing on autos. Joins me here on set. It's great to have you.
Morgan, thanks for having me.
We've called this a historic strike. It's also been a very targeted strike. Only three plants across three of the different companies. Are we potentially closer to a deal here than people realize, or is there still a lot of white space, as was just laid out by Phil?
Well, I think you said a lot there, right? There's a 40% ask from the UAW. There's you have the Detroit 3 at around 20, 19.5, as Phil said. But at the same time, you have Wrangler, Bronco, and then the Canyon, Colorado plants. These are, we'll call them tier 1.5 level products for the automakers. So they didn't go after a transmission facility. They didn't go after F-150. They didn't go after Ram, and they didn't go after the large pickup trucks and SUVs at GM. So they definitely left open the notion that they want to get something done. They want to declare victory. It's been 4 years since they had any sort of labor agreement, and clearly with record profits at the automakers, now is the time to do it. So we'll see. I think that the market has clearly had a rational reaction so far. The stocks really haven't moved very much, and the length and the breadth of this is really what's going to determine how this all plays out.
Yeah. Phil also just outlined the drop in inventory for some of those vehicles at some of those facilities that are being impacted right now. Are those lost sales, or is that just delayed business? It's
especially pointed that you asked the question because Wrangler and Bronco are effectively substitutes for each other. So if a consumer is waiting for a Bronco, there really aren't a whole lot of other products in the market that are very similar. Our take is that it's more of a delayed sale, and there'll be some fixed costs that the automakers will have to, and the supply base will have to work through. But ultimately, I think they'll make that sale and that profitability on that product.
So the weakness we've seen in the stocks in recent days in the OEMs, is that a buying opportunity, or do you see other areas of the supply chain as more compelling right now?
The OEMs are their own discussion. There's so much capex and cost going into the EV investment right now. It's a difficult space. We look at the supply base. We look at the suppliers because you can pick the technologies you want to invest in. They're more diversified from a customer standpoint. They're more diversified from a geographic standpoint. Take a look at like a stock like Dana. DAN's the ticker. It's a Maumee, Ohio-based company right down the road from the Stellantis facility. They have content on the Bronco. They have content on the Wrangler. But it's only half automotive. The rest is commercial vehicle. The rest is off highway, and they're everywhere around the globe. They'll be able to endure this. They'll be able to generate the cash for the next generation of EVs. They're where you want to be in the market as far as from a supplier perspective. The dealers are also another area that we look at. During COVID, no one else had to deal with a loss of supply more than the dealer space. So an AutoNation, a Penske, these are compelling opportunities that we're looking at, maybe outside of the OEM space.
Okay. We step back and we look at all of this, and I realize that you're not necessarily invested. Gabelli's not necessarily invested in Tesla because you're focused on your value funds. But is Tesla a big winner broadly from all of this, no matter what deal gets struck?
Well, you look at the comparative wages or all-in costs for labor at a GM, at a Ford, at a Stellantis, and then you look at the $45 number at Tesla versus, say, call it a 70 number that's about to go much higher. And given the automation at the Tesla facilities, the non-union plants have a cost advantage. Now, whether or not the Tesla story plays out from a profitability perspective, that's maybe that's for another segment. But yeah, at this point in time, there's a definite cost advantage.